Hello, this is Eric Thompson. I am the founder and lead investment manager at Peerless Wealth, a registered investment advisory here in Columbus, Ohio. Thank you for tuning in. I try to put out content that applies to a lot of people, questions I get, articles I read, etc. So on this one, I'm kind of going to start basic. Why should somebody hire a financial advisor? What does a fiduciary mean? And how do we get paid? So hopefully by the end of this, you'll have a little bit better understanding. So the reason you'd hire a financial advisor is really, in my opinion, the same reason you'd hire another professional such as a CPA, tax accountant, attorney. And I'll give you some examples from my own life. When I was in my early and mid-20s, just got out of college, I started as a financial advisor, as an employee of a larger firm, and I wasn't making much money, and my tax return was very simple. You know, I had a W-2, that was about it. And I have a finance degree, so I could do my taxes myself. TurboTax was, back then, was super cheap. And so now it's free, I think. So it didn't take me too long, and there was not a lot of moving parts, not really much I could do to screw up. And it didn't make sense to me to pay hundreds and hundreds of dollars to a CPA on something that I could do myself. However, as my needs progressed and I went into business for myself, had some rental properties, got married, et cetera, had kids, et cetera, the tax questions and the tax expertise was really beyond my scope. And so I hired a professional for it. And I really think I do get better results from that professional. But even if it's the same results, he saves me a ton of time. And I almost view it as an insurance policy against screwing up. And really in the investment management and financial planning space, it's one of the reasons a lot of people hire me is when the dollar amounts get high enough and the stakes get too high, they just don't want to screw it up. And that can really sting a lot more when the dollar amounts are higher. I hired an attorney once my situation got complex enough where I had a business succession plan, where I wanted to appoint guardians to my kids in case something were to happen to me and my wife, beyond something like a basic will. If it was just me and I didn't have a business and I just wanted a basic will, I could probably find it online. I wouldn't necessarily need a professional. So I think those are good analogies to explain why people hire a financial advisor, whether it's retirement or whether it's an inheritance or they've just accumulated enough money to where the decisions really start to matter. And we've attached a handout, and it's actually one from Charles Schwab, who's my custodian, that goes through 5 or 6 benefits of hiring an independent financial advisor that's a fiduciary. And so you can go through that on your own, but in short, fiduciary is rooted in the term trust, and it's the highest level of accountability in my industry. And I operate as a 100% fiduciary. It really doesn't have anything to do with experience or degrees, but it really has to do with how we're compensated. And when an advisor charges commissions and it's buried in the product and it's hidden, they can't call themselves a fiduciary. And oftentimes, representatives of big banks, big Wall Street brokerages, that's oftentimes how they're compensated, or at least some of their compensation. Folks that work in insurance companies, and that isn't as transparent of a way to charge. Fiduciaries are, on the other hand, typically charge a flat percentage of assets that they manage, typically around 1%. It could be slightly higher or slightly lower depending on asset level. So that really puts us on the same side of the table as the client. We don't make money on commissions or putting clients in and out of investments. We really make it based on how the account is doing. So we're on the same side of the table with the clients, and it's a much more transparent and more forthright way of doing business. So really make sure if you're dealing with advisor, they're a 100% fiduciary. If they offer commission-based products or they earn their money in terms of any sort of commissions, then they really can't call themselves that. So you can go through again that illustration that will attach a link to this, and it's actually from Charles Schwab, who's the custodian that I use. So lastly, I'll touch on a question that I get a lot. Can a financial advisor add performance or better outcomes to client investment accounts? And unfortunately, we can't answer that with 100% certainty because we don't know what the client would invest if left to their own devices, and how they would sort of behave in times of market volatility, et cetera, et cetera. However, Vanguard, which is the largest mutual fund company out there, and actually they cater a lot more to do-it-yourself investors than investors that are guided by an advisor, but they did a study over a multi-year period on, and their goal was to determine how much percentage return investment advisors add. And they came up with a number that was really close to 3% a year. And what they did is they studied a group of investors that had invested in Vanguard funds over many, many years on their own, and they calculated the average annual return of each client. And then they compared that to another group of investors that also used primarily Vanguard mutual funds, but had the aid of an advisor to pick their funds and manage their behavior. And what they found is the group that were guided by an advisor, on average, had about a 3% annual return better outcome. So that's average. So we can't promise that, obviously, to each person, but we know that study is pretty powerful. So if we charge 1% and on average, you're 3% better off, then there's 2% of value add there. And it's really not about picking the hot stock or the hot trend. It's about not screwing up, and it's about managing client behavior. Making sure they don't panic when times are low and sell out and miss out on a 30% run, and really make sure they don't buy speculative stuff at the worst time and then see their money get cut in half in a short-term period of time. So those are the types of decisions that oftentimes investors are prone to making on their own that can really make a big impact on their account. So I hope that helps with what we all do, why you would hire a financial advisor, and the value that we can add. Thanks for tuning in, and we'll see you next time.